Moving to Hawaii, should I rent versus buy? In Kona is the big question. If this is your first time here, aloha. Let me quickly introduce myself. My name is Stephen Prosky, and I'm a licensed realtor broker at Real Estate Kona in Compass, Hawaii, and I've been assisting people like yourself successfully buy real estate for more than 20 years. But today, I'm going to be talking about the pros and cons of renting versus buying. If you have any questions about this subject or questions in general about the area, feel free to reach out to me anytime at one of my contact sources below, and I'd be happy to assist in any way I can. So, the first pro on renting here in Kona is, number one, no long-term commitment. Yes, when renting, you sign a lease for a fixed period of time. It can be 6 months, a year, or even longer. If you don't like it at the end of your lease, you find another place and you just move out. Yes, no stress, no commitment. You don't have any ties to that property. The number two pro is lower or no responsibility. Again, you don't own the property, so if something stops working like the AC, the plumbing, or the appliances, you don't have to fix these. That's the landlord's responsibility. Now, you must maintain your rental, but you don't have any responsibility for the maintenance or the cutting of the grass on weekends. You know what I mean. Pro number three, fixed expenses. You're going to have a lease agreement and you're going to have one fixed payment each month, and that is your rent. Now, the electric is going to be your responsibility more than likely, as well as possibly other utilities, but the rental payment should stay the same unless you only have a short-term rental or your landlord decides they want to raise your rent at the end of your lease period. That can happen, but when you sign up for your rental agreement, you should know what your fixed rent will be. Okay, those are the three pros of renting. Now, are the cons. Con number one, inability to build equity. Now, you may have heard this term before, building equity, and this is sometimes you can do when buying a home versus renting. When you are renting, you are basically paying your landlord's mortgage, and they are building the equity off your money. Yes, they made the smart move by buying and having someone else pay off their mortgage and build equity. The number two con, no tax breaks. Yep, when renting, you cannot write off anything, which is complete opposite when you are buying property. When you own property, you get to write off property taxes, mortgage insurance, depreciation, repairs. When you own property, there are many things you can write off. But when renting, there are no tax breaks or tax advantages to renting. The number three con, landlords can raise your rent. Yes, they will. This is probably going to happen here in Kona because we have a shortage of rental properties. So when the lease is up, you can more than likely see cost for your rent going up as well. So if you are planning to rent and not buy, maybe consider a longer lease agreement to avoid this problem moving forward. I run across clients all the time believing they can find a long-term rental, but it's very difficult to find since most property owners, especially condo owners here, would prefer short-term renters versus long-term rentals because they can make more money. Also, there are very few apartment complexes here in Kona. Feel free to reach out and I can share with you some good long-term rental portals for you to check out if interested. Now, let's talk about the pros and cons of buying a home here in Kona, Hawaii. Number one, building equity. Yes, this is my favorite aspect of owning real estate. You can leverage your investment and build equity. Hawaii has a very strong appreciation rate for properties because we are a destination location and people want to live here from all around the world. So an example of this, you purchase a property here in Kona for say $900,000. And over the next 3 to 5 years, appreciation goes up around 6 to 10% annually. To be safe, let's say it goes up 6%. By the way, this is truly attainable. $54,000 a year for 5 years. That's $270,000. Wow! That's fantastic. You can take out a HELOC, buy another property, or sell and take your profits and move on. You can't do that when you're renting. Nope. Number 2, benefit of buying, tax breaks. Like mentioned previously, when you purchase real estate and have a mortgage, there are loads of tax advantages and breaks, like deducting your mortgage interest, property taxes, depreciation, and improvements to the property. Talk with your CPA on this matter to learn more about the tax breaks of owning real estate. When renting, you get none of these. The number 3 pro, you're the boss. Yes, when you buy real estate, you can do whatever you want to your property unless you happen to live in a homeowners association community. And then you have some restrictions, but by and large, you are the boss of your property, and what you do inside of it, like remodeling, can increase your value and increase more equity versus renting. You must ask permission from your landlord, and we all know what's going to happen there. There is no financial benefit to you. So let's go over the cons. Yes, there can be some as well. Con number 1, more responsibility. Yes, you own the property. If something happens while you own it and you need to fix it, yes, you need to fix it. You have to replace the roof maybe, and that's a major expense. You may not be ready to shell out the cash for it, but you have to fix it at your home. If the toilet breaks, it's yours. You have to fix it. So keep this in mind to prepare for emergencies. It might be helpful to establish some just-in-case reserve funds for these emergencies. Number 2, con, harder to move. When you're renting, you know when your time is up and you go. When you own, you can't just pick up and leave. You may want to sell and the market's slow. That could be a problem if you need to move in a hurry. Should I rent my property out? That could work out, but do you want to be a landlord? Maybe not. Or do you need your equity to find another property? Unlike just renting, you can bail without any thought, but when you own real estate and you want or need to move, there are several steps involved with that process. So it's not just an easy get up and move. Which brings me to the final con, number 3, financial risk. Yep, there are some risks involved. So when you are renting, you are spending your cash on a fixed basis, but you know how long that lease term runs and you don't have really any risks. But when you buy real estate and you are investing in an asset and making that mortgage payment every month, and that could run up to 30 years potentially, if you lose your job or run across some financial hard times, or you need to sell your home and the market has tanked, these are things you must take in consideration when buying real estate. And there are potential risks involved when you do so. Hopefully, none of these things happen to you, and the risk versus the reward is worth it at the end of the day. It's always best to talk to a real estate professional who can give you some insight on what the market looks like and where it may be heading before you plunk down a boatload of cash to buy that property. Again, home ownership is not for everybody, so if you want to reach out to me, you have my contact resources below. I'd be happy to discuss these items with you or anything about life here on the Big Island. Thanks again for watching. Mahalo.